I think it's rallying into the earnings, and it could be ripe for at very minimum sort of a inline surprise. They've been warning consistently because I think they really are trying to manage their inventory. I mean, their weakness in many ways is their strength, the fact that they're so strong and discretionary. They're really, really outstanding as far as being able to curate tremendously valuable goods. And their shopping experience, I think, is far superior to Walmart's. That having been said, Walmart is really now trying to become a platform company. And you saw its earnings really coming from all those areas. I don't think Target is anywhere near there. They're really trying to struggle with their inventory at this point. I think it may be another quarter before they stabilize the ship. So to me, stock rallying into the earnings, they're really going to have to surprise to the upside hard in order for the stock to go further. We could have a sell-off. That having been said, though, on a long-term basis, great company, great stock. So any kind of a sharp dip here could definitely be a good opportunity to buy.
All right, so that was our little tease there. You've answered it for us in terms of trading Target, Boris. Thanks. Let's move along to Lowe's now. A similar story. It's already up into the report. Why? Because Home Depot posted a strong beat this morning. But Lowe's only gets about a quarter of its business from the pro segment, while it's about half for Home Depot. Melissa, you think that'll be a headwind?
Yes, that's definitely a different dynamic between the two companies. On the one hand, we heard today from Home Depot that people are still willing to spend on home improvement projects, which is something that's been going strong quarter after quarter. But with Lowe's, it does rely much more heavily on the do-it-yourself consumer. And that kind of customer may skip the landscaping project or repairing the sink as they're able to travel again, dine out again, and just decide to relax as they enjoy the summertime. So Lowe's has been trying to grow its home professional business, and we'll be listening to hear if it's having success to make its business a little bit more stable if do-it-yourself customers decide to take a quarter or two off.
Yeah, Boris, I think it's all pros because no one else can navigate the stores. I mean, you should see me. I go in there and I pull out my phone app and then I look up the item and I say, here's where I am. Now, where in the store is it? And then I try to follow, okay, aisle A38 in order to find whatever it is.
The trick is to always corral a salesperson and have them walk you to it. That's the only way you ever navigate through Lowe's. But, Lowe's is actually supposed to, miss both sequentially and on a year-to-year basis. And I think that's probably right. Especially everybody, of course, talks about the pro versus DIY. And that is true that only 25% of there is pro. But if you look at the subcomponents like Sherwin-Williams, Scotts Miracle-Gro, Trex, all of the suppliers to Lowe's, they've all guided lower. That to me could be a sign that the stock is going to miss as far as expectations go. So to me, right now, Wall Street has been relatively wary of the stock. It's kind of up now on enthusiasm over Home Depot, and I think that could be misplaced. So I would stay away at this point.
What about, if I may follow up on that, Boris, what are your thoughts about Home Depot itself, given some of the headwinds you mentioned?
Yeah, I mean, housing clearly is starting to slow down. I think, for the first time, you're actually able to get a contractor to, pay attention to you. So I think all of those, big cyclical wins are definitely having an impact. That having been said, though, there's still a tremendous amount of consumer demand going forward. So I think both of the companies are actually excellent companies on a long-term basis. But you're right. I do think the next couple of quarters, especially with so much housing supply coming on board and a slowdown in projects, could have a weighing impact on them.
All right, well, we're still waiting to get the back steps repaired, so I will report back when we have a glut of people vying for that business. And finally, let's turn our attention to TJX today, the parent company of TJ Maxx and Home Goods. It's down about 12% this year, which actually makes it the relative outperformer of this group. But will they guide down? I guess, Melissa, that's one of the big questions.
Yes, guidance will really be the interesting thing to watch for TJ Maxx because two of its categories, the home category and the apparel category, have been showing some signs of softness and have also had a lot of markdowns at Target and Walmart and a lot of other places. So is it able to keep those sales going even as demand shows some signs of pulling back? On the other hand, it could benefit from all this excess inventory we're hearing about because it gets a lot of that merchandise and puts it on its shelves. So it may have an abundance of high-quality merchandise in the coming months. And it could also benefit from a more value-mindedness of consumers as they go into back to school and the holiday season, which is when a lot of people are looking for gifts and perhaps looking for new outfits too.
Yeah, Boris, this was a perennial outperformer last decade. It's been more of a struggle stock lately. What do you do with it?
Yeah, I mean, I think Melissa's right that, Target's and Walmart's woes are TJX's blessings in a way because they're going to get some interesting inventory going forward. But there's also a big problem that they've had in terms of transportation and labor costs going up. So the margins are starting to get a little squeezed. And I think that's the big thing. There's no doubt that consumers going down market at this point. The question is how much of consumer demand is going to overcome the cost factor going forward. And the other thing is, how much of consumer demand they see sustained through the Christmas season. That will be the big open question. On top of all that, as you said, the stock is very favorably valued. I mean, some would say it's pretty much overvalued at this point. So there's a lot of, from the valuation point of view, there's a lot of risk here coming into these prices, especially if they just guide to expectation. I think for the stock to really perform well, they got to beat expectation. That's going to be a tall order for them going into the
All right, there you have it. That's the layout. It'll be a fun morning, see how they do. Guys, thank you for now. We appreciate it. Boris Schlossberg and our Melissa Repko.